So it's Thursday. Let's take a look at some legacy stuff. Your stocks, your bonds, your metals, your currencies. Starting with my favorite, the VIX, the VIX, the volatility index, the fear index. If it's high, the world is fearful. If it's low, the world is calmed into complacency. Right now it's about 27, which is still a historic high, which makes sense considering the US is still dealing with ongoing coronavirus, second, third, fourth wave, into the holiday season here without really any solutions readily available. Not only that, we had this little old thing called the election that just happened here. So there's been a lot of sloshing around in the legacy world. But if VIX can maintain levels below 30, historically it's been highly bullish for BTC. BTC creeping above 15 today. Highs of 15.2, 15.3. So VIX can go towards 10 or less, 20Ks in the cards easy. If Dixie can drop below 80, drop below 90, let's say. Dropping below 88 would be insane, but if we could drop below 90, I think BTC 20Ks in the cards. This is the correlation, 30-week rolling correlation. Extremely negative correlation here. Nearly 90, 95%. Saying that BTC moves in the opposite direction of the Dixie. Gold correlation sitting here somewhere around 75% now, down a bit from the nearly 100% highs past few months. Mainly because BTC's kept going up and gold has stalled a little bit. I'll show that in a second. But overall, this looks pretty good for crypto, for BTC specifically. If the Dixie continues to decline, especially related to any additional stimulus, big or small, in the US, which is likely coming either by the end of the year or early next year, that is going to have massive implications for BTC. If we look at the rolling 30-day SPX and Nasdaq correlations, they're actually rather negative now, negative 50%, after being positively correlated for an extended period of time. Again, this is bullish because it says we're decoupling from stocks, which are currently sideways, likely because of election shenanigans, among other things, but the big part of the pause is probably election related or waiting on a stimulus. In either case, BTC is still chugging along here. It says it cares not for your election. It cares not who wins. It is pricing in a dollar that is continuing to be devalued. If you look at the SPX on the cloud, it actually looks like it's ready for some bullish continuation. It had this TK cross recross situation, potential M double top turning into a W, so this looks like it'll go higher. Looks like it'll see new highs, which should be bullish for crypto as well. It just says risk on environment is where we're at still, despite whoever's elected, despite whoever's tax plan, despite Corona, despite the stimulus, which will just surge this even harder. This is setting up for bullish continuation, as is Nasdaq. Again, this bullish TK cross, recross, bearish cross, TK recross situation all speaks to strong bullish continuation, either during the lame duck or early next year, depending on when the stimulus happens. I think that's really what it comes down to. I don't think the market cares at this point who's elected. I think it's all about that stimulus. If we look at gold, gold is actually much like SPX and Nasdaq, also showing signs of bullish continuation post-consolidation. Obviously, this massive bullish trend over the past few years, which has paused every now and then on the way up. Seems to be one of those times currently where it's just ready to go again. Held at the R3 here, yearly pivot. I don't know if we'll see new highs by the end of the year, but definitely looks like the trend is going to remain intact on the bull side. Silver also taking a bit of a pause here. Massive move earlier this year. Makes sense. Just going to relax for a bit, reconsolidate, make up its mind. Should follow the rest of the market to the upside. Looking at DXY again, it had this will she or won't she multiple bull bear scenarios where there was an inverted head and shoulders wanting to mean revert to 96, denied at the key June, denied at the cloud, re-entered the cloud, denied again. Lots of volatility here. Probably election related, probably stimulus related. Definitely very closely tied to news events of the stimulus. They just said today that they're not going to raise rates or lower rates. They're not changing rates. The Fed. This still looks like it wants to go lower. As long as it's below the cloud, it's bearish. So no shocker here. It fits with the theme of money printing and dollar devaluation. And like I said in the beginning, if this breaks lows at 92, 91.5, whatever that is, it's likely headed towards 88, 90. And if it can't find support at 88, things are going to get real ugly for the dollar, real bullish for BTC. You know, the dollar's demise is BTC's benefit. We're going to see a lot of other ancillary things like inflation or rising cost of living, all the things associated with dollar devaluation. But that looks like it's trying to price itself in. I don't think we're quite there yet as far as a slam dunk. But we'll definitely know if this breaks lows. If that breaks lows, it should be very, very bull for BTC. And one other thing people have been talking about recently is USD CNH, which oddly enough, when it was above 7, we were super bullish because it says that there was an increased likelihood of capital flight out of China. So is below 7 bearish? I don't really know. I think we're probably going to see another announcement about China bans Bitcoin. That's just very on brand for any bull trend. Anytime BTC gets attractive price-wise, gets exciting, people like to FOMO in, governments take notice, regulators take notice, people get nervous. So I'm sure that crypto ban is coming sooner rather than later. But overall, the backdrop for legacy on BTC couldn't look better for what essentially is currently price discovery for Bitcoin. I mean, historically, it's really not held the levels it's holding for any extended period of time. It's basically above these levels briefly for a few days or a few hours before immediately just getting smacked down. So as it stands, we're looking bullish and more bullish every day, kind of regardless of what's going on in the world.